Alright, now we have one more thing to do after identifying our trend origin and our market structure. Before identifying a trade, which is to do a bit of real price study. So how do we go about this? We circle this entire region, which is the lowest point that price got to the highest point that price got to. That is to say, from the beginning to the end of the impulsive move. So we identify this, beginning to end of this impulsive move, beginning to end of this impulsive move, beginning to end of this impulsive move. So we have 3. Then we'll go down to a smaller time frame so we can study in better detail exactly what happened within these regions, so that we have a better idea of how price, of not only what direction price is going, because as important as the direction that price is going is, the manner in which price gets there, the way price moves there, is also very, very important. If you've been trading, maybe you went in a situation whereby you entered into a trade, got stopped out, or blew your account safe, only to watch price now start going in your direction. That has literally, it hasn't happened yet, sure, but it's about to happen on gold, because a trade of one of my trades was stopped out early this morning at about what, 3 a.m. and even though it has yet to continue moving in my direction, I'm still very confident that this will. That's what they call stop loss. But that's a discussion for another day. So what do I see here? Let's just do a general overview. I see an impulsive, I see a correctional, impulsive, correctional, and then an impulsive. So I see 3 impulsive moves within this individual impulsive move. And I can also see triple bottom here. I can see triple bottoms here. So that's something to know. So let's go to the second blue box and see what do we have. Price seems to be a commonality of range. For example, price got into a range for this correctional and impulsive. And it seems like a smaller range. Impulsive. Price got into a range again. Impulsive. Price got into a range. Then impulsive. So we have 5 impulsive moves, and almost all of them are characterized by, look at this. Almost all of them are characterized by a range like this. Like this. Like this. I think it's only, okay, no, this one still fits into a range. Yeah, like this. I think I even see 2 ranges in that last one. So yeah, it's characterized by a range. Every single move, every single correctional move was characterized by a range. That's a range appeared before the next impulsive move. So let's look at this, our final blue box. You can see that the price movement is actually quite, let's lock this because, okay, so we can move it freely. So what do I see? I see an impulsive, correctional, impulsive, correctional, impulsive, correctional, and then one major impulsive all the way here. But this time I only notice here, I can only see a range here and here. Yes, we're moving with a slanted range. This one is more straight. Yes, but I still see a range. Let's see if we can see a range here. This does look to me like it looks a lot like a range. If we stretch it out from this edge, it fits into a range. Yep. So that means that what should we be expecting? That means that wherever we see a range in the current price action, we should be expecting, oh, how beautiful is that? We have a range right about here. Look at that. Let's extend it. extend it. So in the current price movement, what I see in the current price movement, this looks, it's not this is like an impulsive correction now followed by another impulsive. We're not in the middle of a correction now. And what have we noticed that has been common about EURGBP? The correctional move is always characterized by a range. So once price breaks out of this range, or even more preferable, instead of waiting for price to break out of the range, we can wait for price to come back to this low. If price is willing to come back to this low, we hope it will, but we don't decide the price movement, we simply move along with what it shows us. So this is going to be our trade. We'll enter the bottom of the range, and our trade, sorry, that's not our trade, our extension should be here. Yeah. So we'll enter the bottom of the trade, and we'll be expecting price to break out of the range. So that's how we'll take a trade. That's our top to bottom analysis, and that's also how we'll take a trade. Sorry, I said top to bottom. That's our real price study, and that is also how we'll take a trade off of this.